What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I bought this REIT and then I sold it right away. And I started doing more digging. I was like, wow, this is a good one. Good high yield, good revenue, good growth. But there were some issues with their payout ratio. And I'm going to go over that at the end of this video. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Always do your due diligence. And of course, this is not financial advice for entertainment purposes only. Disclaimer in the description. Let's check this readout right now. And that real estate investment trust is Digital Realty Trust. So it's sitting at 99.15. It has dividend growth for 17 years. I'll go over that. The average volume is 3.09 million. The market cap is 28.88 billion US dollars. Its year range was 85.76 to 152.74. Day range was 95.33 to 101.28, and its previous close was 101.75. So one thing about these guys, it's very interesting. I did a lot of digging. I was like, wow, these guys are really nice. I mean, just writing down stuff and looking them up. They have 225 operating data center facilities, which is very nice. And they totaled right around 34.5 million rentable square feet, and not just the United States, but Europe, Asia, Canada, and Australia. So they have operating areas in Virginia, Dallas, Chicago, New York State, Silicon Valley, and London. So it's very interesting with this real estate investment trust, but there's some things that were not good, and I'm going to go over that with you guys. So that looks great on paper. Revenue's going up. That's what you always want to see as a someone that invests in real estate investment trust. That's one thing that's good. You need increased revenue. I just posted a recent video on, and I'm glad I can do this. I'm actually called off for a few hours. It's actually frustrating too because I want to have my active income by passive income. But, I really reflected on AGNC Stock and even Altria stock, which is disappointing because their revenue has not really been consistent. Now, Altria has been hiking their dividend, and they are a high yield dividend stock, and people are going to smoke anyways, but the revenue is not consistent or increasing. Is the board of directors going to feel confident in hiking the dividend? That's one thing that you have to think, because I'm thinking from a standpoint too as an investor. If the revenue is going up and they're in demand, that's going to increase confidence in the board of directors to hike a dividend. So let me go over the dividend history of DLR. Now, looking at their dividend history, it looks great because revenue is going up. They're distributing dividends. They're hiking their dividends. So look at this: 2011, 53 cents, 2011, 68 cents, 2012, 73 cents, 2013, 78 cents, 2014, 83 cents, 2015, 85 cents, 2016, 88 cents, 2017, 93 cents, 2018, 101, 2019, 108, 2021, 12. Then they're at 116 right now. Then 2022, they're at 122. So you see their dividend growth in 5 years is kind of slowing down. Payout ratio is 75% according to Zacks. Dividend increases in the last 5 years is 4. If you bought one share, you made 488 with a 4.92% dividend yield. That's good. On paper, it looks great, but we need to do a little bit more digging. So this is on Zacks.com. Digital Realty Trust reported a 1.34 billion in revenue for the quarter ending in March 2023, representing a year-over-year increase in 18.8%. EPS of 1.166 in the same period compares to 29 cents a year ago. Reported revenue represents a surprise of negative 1.73 over the Zacks consensus estimate 1.36 billion, with the consensus of earnings per share being 165. The surprise was plus 61%. While investors closely watch year-over-year changes in headline numbers, revenues, and earnings, they can compare the Wall Street expectations to determine their next course of action. Some key metrics always provide a better insight to the company's underlying performance. As these metrics influence top and bottom performance, comparing them to a year ago numbers and what analysts help investors project a stock performance more accurately. So the net earnings per share, 19 cents versus 25 cents. Rental revenues was 870.98 million compared to 846.69 million. Okay, revenues fee income 7.87 million compared to 6.63 income, so that reported a change of 36.7% year over year. So the other important thing is the revenues tenant reimbursement. So 40.15 million versus 50.29 million estimated by 4 analysts on average. Compared to the year ago, the number represents a negative 22.1% change. Revenues, tenant reimbursements, utilities, 317.15 million versus a 4 analyst average estimate of 316.46 million. The reported number represents a year-over-year change of plus 41.2%. I'm going to go over a few more things. Okay. Now, again, this is on per Zacks consensus. This is on finance.yahoo.com. So their first quarter core funds from operations, FFO per share, was $1.66, beating Zacks' consensus estimate by whisker. The figure, however, fell short a year ago's quarter, 167. The company experienced year-over-year growth in operating revenues during the quarter. However, rising rental property operating expenses is a dampener. DLR maintained its guidance for 2023 core FFO per share, but lowered its expectations for full-year revenues. The company's registered operating revenues of $1.34 billion in the first quarter, increasing 18.8% year over year. However, the same missed Zacks' consensus estimate of 1.73%. Rental property operating expenses flared up 15.7% from the prior year quarter, while total operating expenses increased 17.8%. I'm going to go over one more thing that is critical. And I'm referring to GuruFocus.com. So DLR's dividend payout ratio over the past 10 years right now is 4.4%. During the past 13 years, the highest dividend payout ratio of Digital Realty was 4.48. The lowest was 0.78. The median was 2.76. DLR's dividend payout ratios is ranked worse than 92.42% of 538 companies in the REITs industry. The industry median is 0.90 versus 4.40. So again, this is the thing that's troublesome. But okay, it's 4.92%. During the past 13 years, the highest trailing annual dividend yield of Digital Realty Trust was 6.99%. The lowest was 2.62. The median was 3.64. Dividends per share was 122. Right here, during the past 12 months, DLR's average dividends per share was 5.2% per year. During the past 3 years, the growth rate was 4.10%. During the past 5 years, dividends per share growth was 5.30. During the past 10 years, the dividends per share growth rate was 5.37. So you're seeing an issue. The growth rate is slowing down too. And the payout ratio is 4.4. That got me to run. So I bought it, and I'm selling it. So I just wanted to be clear with you guys. And I'm also going to include Digital Realty Trust 12-month FFO payout ratio at 78.9%. So in its past, if you look at December 2018 and 2022, the payout ratio was 78.4%. Looking in the past 5 years, it peaked in December 2020 at 89.7%. So the 5-year low was 68%. That's a high payout ratio. And again, and now I'm jumping to DLR's dividend payout ratio. So I'm on Wall Street Zen. Digital Realty Trust paid out 413.6% of its earnings over trailing 12 months. So right here, the payout ratio, which they found, was 413.6%. So DLR's earnings, 336.96 million, are insufficient to cover DLR's dividend payouts of 413.6%. So I wanted to go over some things with that. I'm turned off right now. I may eventually rebuy these guys. So I just want to make that clear. This is not financial advice for entertainment purposes, only disclaimer in the description. And another thing that has me concerned is a pending recession, which everybody's predicting now. So could be a risk of a dividend cut, could be a huge dip where I can jump on these guys. But this is one definitely on my mind. If things look good, again, like I said before, I may jump on it. But right now, I bought it. I was turned off and looked at the payout ratio. I was a little concerned with that, with the risk of a potential dividend cut or something. I'd probably look at this for a year and then make a decision on buying these guys. So if you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. This is Darth Dividend. You guys have a good one, and I'm going to enjoy my hours being called off.